Forget BlackRock's 700K Bitcoin prediction. This week, we had a huge asset manager predicting $53 million Bitcoin. You heard that right. $53 million Bitcoin. It's getting crazy, but it's not the only move that's seen from these multi-trillion-dollar bank. Goldman Sachs has also released a massive prediction for 2026. And we have Morgan Stanley announcing that they're going to be launching a Bitcoin wallet this year. It's official. Wall Street is going all in on Bitcoin to start 2026. I think we better buckle up, boys and girls. And of course, I'm not alone. I'm here with our boy Luke, everyone's favorite Aussie, who once was the most bullish Bitcoin creator. Then he got a little bearish on me. I'm not going to lie. You got a little bearish on me, Luke. But let's dive into the first one. I think this... First, again, I'm going to literally ramp up from like just a general trend of where we're going all the way up into that $53 million Bitcoin prediction. So the first one is from BlackRock. BlackRock is predicting that 2026 is going to be a major shift in retail or Main Street investing into Bitcoin. I've been saying this has probably been the case where, we officially got the Bitcoin ETFs in 2024. The last 2 years, we've been seeing the institutional interest kind of ramp up. The case is 2026 is when they're finally comfortable with getting into Bitcoin. They're finally comfortable with investing a significant portion of their portfolio into Bitcoin. And so this is what BlackRock's saying. Again, BlackRock might know a little more than us over here at Simply Bitcoin, or even Luke on his channel. Yeah. They're the ones talking to their customers. They're the ones seeing what's happening on the back end with institutional interests. But this is their take. It could be the year that Main Street's appetite for cryptocurrency exposure meaningfully grows. Quote, it's still early. Many investors have still just been starting their educational journey around what is Bitcoin and how it might fit in their portfolio. We see this still being very early days for Bitcoin. Now, from a Bitcoiner's perspective, you've probably been in for Bitcoin for many years now. Bitcoin's 17 years old. But again, from an institutional perspective, it's only 2 years old. And really, it's only 1 year old. Last year was the only year that they can finally, via all of the red tape, be able to get into Bitcoin. And of course, the deal. They move very slowly on these new assets, these new investments, especially one with such a bad branding narrative as Bitcoin has had for the last 17 years. Anyways, going further, for many financial advisors, maybe they didn't have access to crypto before. Again, that was officially released towards the end of 2025, or they weren't able to buy IBIT before it was approved on their platforms, which we saw, Vanguard begrudgingly bend the knee towards the end of the year again. But for those who have taken the plunge, this asset class is instilling a sense of loyalty despite the insane volatility that we've seen, which is what we've been seeing with the ETFs, that, hey, even though there has been a lot of outflows, the majority of Bitcoin that's been held in these ETFs was actually hodled by, these ETF holders. I believe that the numbers, if I'm remembering correctly, was 97% of all the Bitcoin that went into ETFs basically stayed in the ETF. So, as much as I give the boomers a lot of flack here, the boomers that are buying the ETF, they got some diamond hands here. They're not concerned about the volatility. Did I get kicked out?
Bro, I kicked your chart off screen. Apologies, that's behind the scenes.
Okay. I'm like, wait, what's going on? Okay. Now, we're going further. Quote, they're sticking with it, not necessarily selling out and looking for another alternative so quickly. It shows that investors that are moving into Bitcoin and getting exposure to Bitcoin through these ETFs, they're here for the long term. They're confident in where Bitcoin is going, and they're not necessarily moving in or moving out based on that volatility, which is, again, what the data is backing up and has been showing us. Whereas, a lot of people have been saying, hey, yes, institutions are getting in Bitcoin, but they're not here for Bitcoin long-term. They're just here for the gains. Well, the data, and from what we're hearing from BlackRock themselves, it is kind of counter to that narrative. A lot of people have been saying, oh, they're going to have, weak hands. They're just here for the fiat gains. Not saying they're here for the revolution, But the fiat gains, the greed that comes with number go up, definitely makes people want to sit in their positions and continue to accumulate, which is, I think, what we've seen in the last, towards the end of the year, starting 2026. So first off, I'm going to pass it over to you, Luke. I know we've been talking about this constantly. Can we really trust what BlackRock's saying? Half the time you're like, they're just talking their bags, but we kind of had this same narrative around Saylor. Saylor didn't seem to panic, and we kept kind of speculating that it's because he probably knows something else is coming behind the scenes. He's having these conversations. He's seeing things that we don't see, and obviously can't really talk about them too publicly. I think BlackRock is in a similar position right here. I think at this point, as much as we may not like BlackRock, I think we can very confidently kind of assume that what they're saying is the case. So, Luke, before we keep moving, what's your thoughts on this little headline coming out of CNBC?
So I got two thoughts. Again, we're building the case for Wall Street going all in on Bitcoin this week. My first thought is something that you said, Opti. You said Wall Street's been in the game for 2 years in Bitcoin, maximum. So many people are going to hear that and they're going to say, oh, it's cope, it's hopium, it's bullish bullshit propaganda. But we have charts to back it up. I keep saying the only chart that matters is the number of Bitcoin on exchanges. And that's because 2 years ago, maybe 3 years ago, we saw an inflection point where for the first time in Bitcoin's life, we saw Bitcoin beginning to leave the exchanges. And that is because institutions, multi-trillion-dollar banks, sovereign wealth funds, nation states, billionaires, they're all going all in on Bitcoin, and they're taking the Bitcoin off the exchange. So I think we are 2 years into what Michael Saylor called the 10-year digital gold rush. He said that, beginning in 2024, going through to 2034, this is going to be the decade of the digital gold rush. I completely sign off on that thesis. That's my first thought. The second thought that I've got is we are now watching the biggest banks in the world pivot and flip into Bitcoin.
Yeah.
So we got Bank of America recommending a 4% Bitcoin allocation. We got Morgan Stanley. We got some news from Morgan Stanley. I don't want to let it leak just yet. I might hold on to that one for a little bit later. But they're going all in on Bitcoin. We've got Bank of America. We've got JP Morgan doing one of the biggest backflips I've ever seen. We've got, It's BlackRock recommending a 2% Bitcoin allocation now. For all of the money it manages, it has like 13 or 14 trillion dollars.
I think it's 17.
17?
I think it's somewhere like
that.
I think it's somewhere like that. But anyways, it's still in the tens of trillions.
It is, and this is the broader point. Banks control tens of trillions of dollars. These money managers, they control around $50 trillion the last time I checked. Then you've got sovereign wealth funds. They've got somewhere around $50 trillion. And if all of these banks, like Bank of America, now agrees that a 4% allocation for Bitcoin is optimal. We got Morgan Stanley talking about a 4% allocation of Bitcoin. We got BlackRock, 2% Bitcoin allocation. If we now have consensus from all of the money managers that somewhere between 2, 4, 5% Bitcoin allocation is optimal, what people are missing is as these money managers begin to allocate 1, 2, 4, 5% of the money that they have under management, this is a non-linear process. This will have non-linear impacts on the price of Bitcoin. Bitcoin is a $2 trillion asset. Again, Bitcoin has that multiplier effect. So we haven't seen $2 trillion flow into Bitcoin over the past 16 years. It's been more like $500 to $800 billion of capital has actually gone into Bitcoin. And then you start running the numbers and you're like, okay, sovereign wealth funds, $50 trillion, banks, tens of trillions, money managers, over 50 trillion. They have hundreds of trillions just between themselves. And if they want to personally position and get their clients into the 2, 3, 4, 5% allocations to Bitcoin that they're publicly recommending, again, privately, I think they're going much bigger than that before they tell the rest of the world that a 50% allocation of Bitcoin is optimal. That process of just 1 trillion or 2 trillion or just 5 trillion finding its way into Bitcoin over the next 5 years, it is not going to have this very easily predictable impact on Bitcoin's price, especially as the supply of Bitcoin on exchanges continues to shrink. We're going to reach an inflection point, and we're going to see Bitcoin begin to behave in ways that I don't think we've ever seen it behave in before. That's just my take. Opti, those are just two quick little thoughts I had on what you've laid out so far, but continue feeding us the bullishness. What else have we seen?
Yeah, we're I told you guys there's going to be Hopium Friday with Luke and me today. So, you know, that's what we're doing today. All right, next headline, which I am going to roll into the Morgan Stanley news, but we got this one from Forbes. Shouts out to our boy Billy Bambro, aka Luke's alt account at Forbes. If you read Luke, or if you know Luke's videos and you read Billy Bambro, you're like, yo, it's the same person. They're using the same techniques. It's got to be Luke. Anyways, the headline here is Goldman Sachs just issued a huge 2026 crypto forecast as 200K Bitcoin price predicted. I'm not going to read the whole thing. I just highlighted a little bit. Here is the Goldman Sachs analyst take. Quote, we see the improving regulatory backdrop as a key driver to continued institutional crypto adoption, especially for buy-side and sell-side financial firms, as well new use cases for crypto developing beyond trading, which is tokenization. That's like the biggest trend. You know, I think it's basically shit coining by any other name, but the banks, I said it last year. Actually, I probably said it a few years ago. I don't think we are ready for Wall Street shitcoining phase. It's not going to be in the altcoins. I don't think it's going to be in these tokenized deposits. That's the whole rage. That's what they're all talking about. You know, tokenize all the things. Again, we're back to 2017 with these narratives. Going further, it goes, quote, 2026 could be a strong year for Bitcoin, supported by potential rate cuts, which we just heard the other day that I believe it was Scott Bessent. He said, like, we need 100 bips cut. And you're like, yo, they're going to turn the money printer on insane. And then going further and more accommodating regulatory stance towards crypto. Quote, putting his 2026 Bitcoin price prediction at up to 225K. However, heightened volatility is likely amid ongoing macroeconomic and geopolitical uncertainties, which is to say we probably will get the price to go up. It might go down afterwards, like we might see blow off top. I know a lot of people are talking about a delayed cycle, delayed parabolic run. Personally, I'm not really on that train, but, you know, anything can happen. I think, you know, parabolic run up, if we do get to the 200, 300, 400K range, we will probably get a pullback down into the 100K range. But, hey, I'm all good for all volatility at this point, just as long as it's not a stable coin. As long as Bitcoin isn't a stable coin, volatility is good. It's good for our business. It's good for everyone out there because then people get interested in Bitcoin. When it's flat, no one cares. When it dumps, everyone's like, why? When it starts pumping, everyone gets excited. Anyways, going further, again, I said I was going to roll this into the Morgan Stanley news. Here's Barron's reporting on this coming out yesterday. Morgan Stanley is betting big on digital assets, workplace service, and private markets, how they tie together. The Wall Street giant is planning to launch a digital wallet later this year that could support all kinds of tokenized assets, including private company equities. Again, it's shitcoining by any other name, but with that comes they're basically launching a Bitcoin wallet with these tokenized assets, tokenized digital assets, basically tokenize all the things, essentially tokenize stocks and equities, which is, of course, where they're probably going to make a shit ton of money, which is why I keep saying that's probably where the shit coining phase will be. And I've seen a lot of people talk about alt seasons around the corner. You know, look at this bullish setup here. And I'm like, you guys are not seeing what Wall Street is saying. I don't think they're going to be buying. I don't even know what the shit coins are now. Like, you know, Wall Street's not going to be buying fart coin here. They're going to be buying these tokenized digital assets, you know, tokenized whatever, tokenized Amazon stock or something like that. That's where I think the quote unquote new altcoin phase will come from. But with that means they're obviously having to embrace Bitcoin. If they launch a digital wallet and it doesn't have Bitcoin in it, it's like, what is this hot garbage? So from my vantage point, Morgan Stanley is going to drop a Bitcoin wallet with all this other tokenized garbage on top of it. This tokenized asset is like the latest rage. We've heard BlackRock talk about it. Goldman Sachs talk about it. Now Morgan Stanley's talking about it. It's like, just go where the puck's going. And I'm not saying buy these tokenized assets. I'm just saying this is what they're telling you. This is what they want to do. So, I mean, Wall Street is going all in on Bitcoin. With that is going to come the shitcoin phase. I think it's very surprising that we initially kind of saw Wall Street only embrace Bitcoin. I think now this year we're probably going to see a whole slew of hot garbage come out of Wall Street under this guise of tokenized digital assets or tokenized stocks and equities. It's becoming very clear that that is what they want to do. So take that with a grain of salt. They have to embrace Bitcoin. But before I keep going, Luke, what's your thoughts on this one?
I got a lot of thoughts on crypto and altcoins. Again, we've both been Bitcoin only for 5 years for a very good reason. We both look like morons in 2021. We were getting dunked on by all of the crypto bros. They had .eth in their handles. They were calling me a Neanderthal for not seeing the store of value potential of NFTs. They were attacking us. And again, I think, time has proved, if you look over the past 5 years, crypto's really seen about 2 months worth of rallying. And what's really interesting is they're down. Like, this is the crypto market cap of the top 30 altcoins. It is down 30% from its 2021 all-time high. Again, Bitcoin's all-time high, it was $65-ish thousand in 2021. We're at 90. We're at 90,000. We're up 30%. Shitcoins are down 30% from 2021. And this is ignoring inflation. Again, inflation's been compounding at least 3% per year. So I think, just building on what you said, Opti, it's not just speculation. Institutions are not buying shitcoins. Institutions are not buying altcoins. You can see it in the data. So many people got wrecked recently because they thought, okay, Bitcoin saw a halving in 2024. Altcoins always play catch up to Bitcoin after the halving. And what did we see? We didn't see that. We saw a Bitcoin only bull market over the past 12 to 18 months. Bitcoin's rallied from 15K to 126K, nearly doubled its all-time high. I mean, previous all-time high was in the 60s. We got to 126. Bitcoin nearly doubled previous all-time high. All of the altcoins struggled, except for Zcash, which I think saw a little bit of a coordinated insider pump and dump.
And also coordinated crash this week.
We might cover that. We might have to have a look at that, because that's true. Coordinated pump, dump, and then crash. What we've seen is no other altcoins have set all-time highs. Ethereum couldn't do it. Solana couldn't do it. All of these things, they're trending to zero, not just in Bitcoin terms, but also in fiat terms. So again, I think we've been speculating about this for years, Opti, and like, it's kind of come true. Like, we've seen like 3 months of correction now, and a lot of people were saying, finally, altcoins are going to rally because Bitcoin tops first. But then as Bitcoin tops, who knows whether it's topped, but money flows out of Bitcoin into shitcoins. We still haven't seen it. The data's as clear as day. And again, I think this it just goes back to first principles, Opti. The reason why we have not seen an alt season, the reason why altcoins are not setting new all-time highs, it's because the market is now dominated by a completely different player. It's now dominated by BlackRock, the institutions, the sovereign wealth funds, the billionaires. And when I say dominated, I'm not saying they're 100% of the market, but it's been my thesis for 5 years now that pre-2020, this was retail stage. I think if you have to estimate, at least 95% of the trading was coming from retail institutions. Now, post-2020, I think that's been very different. I think retail's probably been less than 30% of the total trading volume. Again, that number's a little bit higher because in 2021, we did see a little bit of an alt season. We saw some shenanigans when JPEGs of a rock were selling for like $10 million and all these ridiculous prices. But if you look at the 5-year period, you zoom out, you look at from 2020 to 2025, just my guess. I'd love your thoughts on this in a moment, Opti, but I think it's more being like 70% big money, 30% retail. And this is why we're seeing all of the clues in the trading data. You can see it as clear as day. Altcoins are getting wrecked against Bitcoin, and they have been getting wrecked for a while now. And I just think we're going to see some really interesting things. This is also why we've seen number of Bitcoin for the first time in Bitcoin's life decline for 5 years. There's a lot of different data sources, but all of them show the same trend. Hundreds of thousands, if not a million coins have left the spot exchanges and the OTC desks over the past 3 to 4 to 5 years. And that's just because the market's different. There's new players in the market. They're not speculating on Bitcoin. They're not mining Bitcoin and sticking it on an exchange. They're mining Bitcoin and put it in their treasury. Completely different world.
Yeah, no, I mean, we were kind of hinting at this a couple of, like all of last year, where it started to feel like altcoins were dying. I think I made a very public statement on the show that once the Bitcoin ETFs launched and you saw all the inflows from the institutions going into Bitcoin, you're like, oh, this makes perfect sense. Like, they're not going to be buying fart coin, freaking Charles Schwab advisors can't be like, all right, guys, I got a very good investment. You should be buying fart coin right now. Like, unless they're going full Wolf of Wall Street, Leonardo DiCaprio here, and they're just literally shilling dog shit to their customers, which their reputations cannot do. It's like they're not going to be buying all this hot garbage. Well, it is interesting that you are seeing them kind of rebrand the shitcoin narrative into these tokenized digital assets, which is essentially what we've seen happen in Bitcoin for so long. Remember the ICO phase, and then it's the NFT phase, and now we're going to this tokenized assets from Wall Street. It's like it's the same playbook, just slightly altered, which is, hey, we like Bitcoin, buy this other stuff, which is a tacit approval of Bitcoin to us. And I see it in the chat, like, yes, the banks coming into Bitcoin, we really don't care about the banks coming into Bitcoin. It's like, okay, cool, bro. I thought we were here to disintermediate the banks, but they still carry a lot of weight and authority when it comes to just the average person. If every huge bank, huge institution, wealth manager, asset manager is embracing Bitcoin, shilling, anywhere from 1% to 4% of people's portfolio into Bitcoin, it's like, okay, everyone, like BlackRock said in the beginning, this might be the year that we see a significant push into Bitcoin and maybe some of these other hot garbage cryptos. But let's get into the really crazy, absolute, look, I'm as bullish as anyone. And even when I read this headline, me and Luke were like, yo, what are they smoking? Like, this is some grade A hopium right here. So let me pull that up. And not only is it some grade A hopium, but this prediction is all over the place. Absolutely all over the place. So here's DL News, and it goes, Bitcoin to $53 million. Yes, Vanek really just made that prediction. And here we go. It goes, Vanek says Bitcoin's price could hit $53 million by 2050 as the crypto is adopted as a settlement currency for global trade. Quote, the scenario requires Bitcoin to achieve parity with or surpass gold as a primary global reserve asset, constituting nearly 30% of world financial assets. The firm's bear case, and this is where it's just like, dude, this is like, I don't want to say it's idiotic, but this range here, it's crazier than the power law. Okay, let me just put it that way. And it goes, the firm's bear case predicts Bitcoin hitting $130,000 by 2050. Its base case projects a price of 2.9 million by 2050. And then, of course, the bull case, 53 million by 2050. Like, what? It's insane. Anyways, Vanek's forecast highlights how traditional financial firms are increasingly growing more bullish on crypto after years of treating digital assets as an unwanted and seedy subcategory of finance. It also comes as Bitcoin is showing signs of making a recovery after a wave of liquidations, which we've been covering. Wall Street, BlackRock, JP Morgan, they're all saying the same thing. Hey, this Bitcoin thing's not going to go away. The only problem is it's being driven by leverage. So what are they doing? They're liquidating everyone in the leverage markets. This is why we're seeing the Bitcoin price whipsaw in this, 80 to 90K range, is because everyone thinks, oh, now it's time to long. Well, guess what? The longs get liquidated. It dumps. And then everyone's like, okay, now it's time to short. What happens? The shorts get liquidated and we pump back up. It's only a matter of time until this pressure, this lid right now, gets blown through. And I think the kind of ranges, as I've been kind of showing you guys when I show you my TA, my magic lines, is roughly around that 94, 95K. If that breaks through convincingly, if all the leverage is reset, then it goes to 100. And I think once we break 100 again, is when we really start to see the action happen. And actually, before I pass it to you, Luke, this also just dropped this morning, though. This is more on, you know, digital tokenization of everything. BNY Mellon just this morning announced another tokenized digital asset product. It's like every huge bank, like I've been telling you guys, is getting into Bitcoin. Here's the headline. BNY extends digital cash capabilities for institutional clients. So when you read into this, you're like, wait, they're creating a shitcoin? What? So BNY Mellon, global financial service company, has taken the first step in its strategy to tokenize deposits by enabling the on-chain mirrored representation of client deposits balances on its digital asset platform. Going further, how it will work, beginning with collateral and margin workflow use cases, this launched BNY's cash capabilities by creating on-chain digital book entries that represent participating clients' existing demand deposit claims against the banks. Oh, dude, the word salad's crazy. This capability operates on BNY's private permission blockchain and is governed by the company's established risk compliance and control framework. All right, so BNY Mellon's launching their own, you know, shitcoin, their own private blockchain, permission blockchain, and you're telling me that they're not going all in on Bitcoin. I think 2025, I was probably ahead when I said that we're going to see Wall Street shitcoin. You know, I was off by a year. It seems like 2026 is the year that not only they have to let Bitcoin out because they can't not embrace Bitcoin and also embrace shitcoins or permission blockchains, etc. But I think we're going to see a flood of this tokenized asset rhetoric spread through Wall Street. This is the new shitcoin phase, and I would not be holding this with you know, a 10-foot pole. I would not be touching this with your wallets, guys. Like, this is the new scam playing out. But part of that also is essentially, you know, Bitcoin is a Trojan horse. They have to embrace Bitcoin. Like we saw the Trump administration when they wanted to embrace stable coins, they couldn't be like, yeah, stable coins are good, but Bitcoin's bad. They're like, yeah, Bitcoin's cool, but we like stable coins more, which is like, all right, dude, you know, you want to hold stable coins by all means. Literally by definition, it's stable. We all saw what Bitcoin did in 2025, and no one cares about stability. People want to see gain. People want to see number go up. People want to beat inflation. People want to get out of their, you know, very shitty position. People want to prosper, which is why I think just letting Bitcoin through the gate here, whether it's through stable coins or tokenized asset deposits, whatever that really means, it's like this is going to be a huge win. I'm doubling down on 2026 is going to be a great year. Yes, I was wrong last year, but I think 2026 is setting up perfectly for an incredibly bullish year. And to wrap up today's show, Luke and I will do some chart bowling. We will look at some Bitcoin price. I will bring up the 1 minute chart. Okay, guys, you know, you guys will get what you asked for. But anyways, Luke, let's talk about the VanEck price prediction. We were talking about it this morning. The 130K by 2050, if that happens, if that's their bear case, like, in my opinion, that means Bitcoin's dead. Like, the Bitcoin is absolutely, there's no point in holding Bitcoin if it's 130K in 25 years. Like, that's not what this is about. Now, I'm not saying like we're just here for the gains. I'm just saying if it only goes to 130 in 25 years, we were completely wrong about this. So we'll scrap that because that's just like that's ridiculous price prediction to even say that as a bear case. The 2.9 to 53 million is a lot more interesting because I think that's directionally correct, though. 2.9 in 25 years. I don't know what the percentage gain is, but that still sounds bearish to me. I'm with Hal Finney, you know, at minimum 10 million. I think now updated to gold's price, it's probably in the 15, 20 million area. So the 53 million doesn't sound too crazy, though. I really wanted to put on the thumbnail today You know, I wanted to be Vanek predicts $53 million Bitcoin on the thumbnail. Like, what are they smoking? Because I want some of this. Like, I'm as bullish as anyone. And that still sounds crazy to me. So, Luke, I know you're as bullish as almost anyone. Is there possibilities? Is there a non-zero chance that this could happen?
Oh, it's more of my base case. Before I get into numbers, before we do numbers, I think first, just the range. I don't know what they're talking about. Like, again, if Bitcoin's a stable coin for 20 years, it's still the best money in the world. Because if Bitcoin like keeps up with the pace of inflation for 25 years, it at least gives 8 billion people the same rules and the same property rights, and no other money in the world can do that. And again, gold is inflationary. So as the price goes up, its supply is going to be increased by 2, 3, 4% a year. And most gold holders are probably going to get wrecked over the multi-decade time frame. But 130 is an outright failure. Bitcoin's not even keeping up with inflation. So, that's the first thing. I just think that range is nuts. It's nearly as wild as the power law said. Anywhere between 50K and 300K today in Q1 2026 is correct. It's like, that's ridiculous. And anyway, we might talk more about the power law a little bit later, but I think firstly, 53 million, that's not crazy. That's conservative, because if you just look at, there's $900 trillion of wealth in the world. If 10% of that wants to flow into Bitcoin, let's say 100 trillion for easy mathematical purposes. If 100 trillion wants to flow in, you've got to use your 6x multiplier, because not every $1 of Bitcoin pushes the market cap up by $1. So that means you've got 600 trillion of market cap added to Bitcoin. And if you got 21 million coins, that's $30 million per Bitcoin. That's if just 10% of the money wants to flow into Bitcoin. And again, we know over the next decade or 2 decades, global wealth is going to expand. It's going to go from 900 trillion to 1,000 trillion to eventually 2,000 trillion. So 100 trillion of inflows is actually incredibly conservative. So I'm with you there, Opti. I think 50 million, 100 million per coin in today's purchasing power. Not talking about hyperinflation.
Let's go.
Yeah, that's just base case. I think that's kind of like 100 million, $200 million per coin is base case. But again, I don't think Bitcoin's just going to be another asset where you've got 100 trillion, or you've got 100 trillion flowing into Bitcoin. And I don't think you can still see a 200, 300, $400 trillion fiat money bond market, or a 500, 600, $700 trillion real estate market. I just don't see Bitcoin getting $100 trillion of flows and the other inferior forms of money also inflating and getting significantly bigger over the next coming decades. So this is why I'm more of an all or nothing, Bitcoiner. It either takes all of the money in the world or it fails and it goes to zero. I think it just getting 100 trillion or just 10% of global wealth, that would be it's a historical anachronism. It's not something we've seen in history. You've never seen a money that's demonstratively much better than previous forms of money just kind of come along and just get 5 or 10% of the world's assets and just chill out there and just be digital gold. You've never seen it before. This is why I just disagree with the power law. Again, big numbers. It predicts $4 million Bitcoin by 2040. But think about it. If global wealth has expanded over the next 15 years, which it should, and you've got 2,000 or 3,000 trillion dollars of money in the world, do you really think that Bitcoin at $4 million a coin or $84 trillion of market cap, do we really think that that's a huge success? I just don't think it is. If you look at the history of any technology or any money, you've never seen a transition occur that slowly. It's a slow transition. It's not an exponential transition. I could talk about this for hours, but I think 53 million, it's probably more directionally correct than like the 3 or 4 million that the power law is predicting. What do you think, Opti?
I mean, I'm with you. Literally 3 million in 25 years. Again, I don't know what the gains are on that, but I was promised 1 million this year or last year, so it just seems bearish to me, bro. Like, I forget what the predictions are, but it's like 1 million by 2030 or something like that. So I think directionally 3 million in 25 years is just extremely bearish. Like that should be their bear case, in my opinion. But this range here is redonkulous. You know, 130K in 25 years, or maybe 3 million, or maybe 53 million. It should be like 3 million in 25 years, and then in the middle, like 25 million, and then 53 million is the bull case. Like, I think that's probably closer to what's going to happen. But again, what do I know? I do agree with you, though, that the adoption of Bitcoin as better money, the adoption of better money, it's not a slow, gradual climb forever. There is a point where it does basically flip the switch, and it goes from the old system to the new system. And now that we can actually price it in something, now that we can measure the value of it, I think that's going to be a hockey stick up, the S-curve adoption of Bitcoin and in terms of fiat price. But anyways, let's keep it moving. I do have Matt Hougan saying from Bitwise, kind of explaining what he thinks happened in 2025 and what he thinks is going to happen in 2026. And he's using gold as a good example. And then coming out of South Korea, we have some other interesting news. The nation state game theory is kicking into overdrive. And then to wrap up the show, it's Friday, so Luke and I will just kind of shoot the shit on where the price is. Is Luke still bullish or not? I might troll him a little bit because he did get bearish on me a little bit, guys, and he hasn't been on the show, so I can't troll him publicly yet. But that's today's layout, guys. So one commercial break, and we'll be right back.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
All right, guys, we're back. The current Bitcoin price is $90,780, which is a 28% discount from all-time high. The market cap is currently 1.81 trillion, and the block height, the only time that really matters in the universe, or at least on planet Earth, is 931,578. Okay, so as I was telling you, I really like this framework. Me and Luke were actually thinking about putting this in the beginning of the show, but we're going to just be extremely bullish throughout the whole show. So I think this is a great framework for what we potentially could see in 2026. And again, he is using 2025 in gold to kind of explain what happened, the mechanics behind the market, and why he's thinking this is going to happen to Bitcoin this year. Whether he's right or wrong, I think this is a good framework. He might be just off by a year. Who knows? But the timing seems to work out. So let's play the clip, and then Luke and I will chat about it.
What do you say to the people who they see all of this ETF demand at the same time that crypto prices maybe experience some weakness? Because I know you see this narrative out on X. I see it all the time. It's like people almost get mad at the ETFs if they don't result in the underlying crypto price action that they expect. And so, like, how do you explain that?
Yeah, it's because other people are selling. I mean, the ETFs are absorbing the selling of OG and traditional investors. And it's just a ratio. The thing I often point people to because of what happened last year is actually gold. Everyone knows that gold had a tremendous year in 2025. It soared to new all-time highs. It ripped. It was the best performing asset in the world. And when people note that, they say, what drove it? It was central bank purchases. But if you actually look at the data, Nate, what you see is central bank purchases ramped after the U.S. seized Russia's assets, and they went from about 400 tons a year to 1,000 tons a year. That's a lot of gold. So in 2023, central banks bought 1,000 tons of gold. The price didn't do much. In 2024, they bought 1,000 tons of gold. The price didn't do much. In 2025, they bought 1,000 tons of gold, and gold went parabolic. And the reason it took 3 years is because of those first 2 years, there were existing holders who were willing to sell. And they were willing to sell, and miners were willing to sell. And then they ran out of gold to sell, but the demand was still there. And when that moment happened, the price went parabolic. So I think what we saw in 2025 is you had institutions playing the role in crypto that central banks did in gold. Persistent buying demand. You mentioned the statistics, buying more than 100% of the supply. And you had some existing people that were willing to sell. And maybe in Q1 or Q2 of this year, they'll continue to be willing to sell. But it's not an infinite supply. At some point, they will run out. And Bitcoin will have the same experience that gold did in 2025, which is, I think, the price will go parabolic.
Hey, told you guys. We're filling you with some grade A hopium this year. Now, lining this up, you know, he essentially said it took 3 years for gold to make the parabolic run that it has. Well, if again, as the meme goes, history doesn't repeat, but it often rhymes. Well, when did the ETF get launched? 2 years ago. So we've seen the amount of selling go in Bitcoin. Obviously, the fact it's been holding on, how it's been holding on, I would say is very strong. Means there's a lot of buying pressure, just not enough to outpace the selling pressure. But if this is the year that we finally outpace the selling pressure, Luke, is this the year we finally get the mother of all supply shocks? Is the supply shock in the room with us, Luke, in 2026? Or are we just continuously spreading fake news and, you know, narrative propaganda? Because I'm waiting for the supply shock. I was a true believer, and I'm like, man, maybe it's never happening. Maybe we don't get a supply shock. So, Luke, do you think this framework is, on the one hand, you know, a logical way to view this? And again, is the supply shock in the room with us?
So the supply shock is absolutely in the room with us. Now, again, let's be very clear, because I've seen that the power law promoters, they make a straw man argument that's never been my argument. So they will say that there is no correlation between Bitcoin on exchanges and short-term price movement. And that is absolutely true. It's never been my argument. My argument is the supply shock will manifest itself in one violent repricing event of Bitcoin. What you're going to see is, I believe, could be wrong, but when the number of Bitcoin gets very close to zero or hits zero, I don't know whether it's going to take a week or a month, maybe 3 months, but you're going to see Bitcoin be completely repriced. And that's going to happen when this chart gets closer to zero. And that's the number of Bitcoin on exchanges. Again, this is a little bit of an outdated chart. The supply suffocation's actually gone on for a little bit longer now. But I don't know when you're going to see that repricing event happen. Could happen next month. It might happen a year from now. It might happen when the number of Bitcoin on exchanges hits 1 million. Who knows? But it's going to be one violent repricing. Bitcoin's going to go from 300,000 to 3 million. It's probably going to do it in a month. It's going to catch everybody off guard, which is why we continue to say, Opti, on both our channels, you simply buy your Bitcoin, you put it in self-custody, and you wait. You don't get greedy. You don't try to time the market. We don't know what the future holds. This is just my speculation, but I believe the supply shock, it only matters once. It's only going to happen once. I think it's, again, it could happen tomorrow. It's not a 0% probability. It's a 0.1% chance. But again, I think as the world changes, your probabilities need to change. Again, in 2019, when there were no nation states, no billionaires, no sovereign wealth funds talking about Bitcoin, there was no strategic Bitcoin reserve talk, there was no billionaires buying up 3% of the supply like MicroStrategy has, and there was no evidence of a supply shock. There was no Bitcoin leaving the exchanges for a consistent period of time. The chances of waking up tomorrow and you see Bitcoin repriced 10 times higher, the chances of that were like 0.00001%, nearly impossible. And that was my take. 2019, I believed these models. 2019, I believed diminishing returns. I believed in things like the power law. I thought things like stock to flow kind of directionally made sense. Then 2020 happened and it's a complete flip because the people dominating the market from 2020 to 2025, they're completely different allocators. We've got rumors of Middle Eastern. We don't even have rumors. We have Middle Eastern multi-$100 billion sovereign wealth funds taking massive positions in Bitcoin. They're mining Bitcoin. It's happening all around the world. Honestly, if we wake up tomorrow and Bitcoin's at $30,000 or $3 million, I wouldn't be surprised either way. If it's wider than those ranges, I'd probably be surprised. But like, I'm personally mentally prepared for that type of volatility. The closer we get to the number of Bitcoin on exchanges getting closer to zero, be prepared for more volatility. Because if you look at the Bitcoin multiplier effect, the first time I started talking about this in 2020, it was at like 2.3. Now it's at 6. Why? It's because there's less available Bitcoin for sale. That means the price, the amount of capital coming into Bitcoin, it's getting a little bit more sensitive. It's pushing Bitcoin up a little bit more for every dollar that comes in. But again, why haven't we seen the parabolic blow off top? Because who's dominating the market? It's the big boys. They don't chase green candles like retail did pre-2020. Again, everything I see just confirms in my eyes, Opti, that the supply shock is slowly brewing. The multiplier effect's gone from 2.3 to 6 over the past 4 to 5 years. Supply on exchanges continues to dwindle. I just think one day Saylor is going to have to be buying coins, and when he smash buys Bitcoin on a Monday morning, one of these days Bitcoin's going to go from 200K to 400K nearly overnight. And then everybody's going to look around and go, holy shit, it's happening. And that's when the scramble happens for the last million Bitcoin on exchanges. And that's where shit just gets unpredictable. I don't know what's going to happen, but I think big green candles are coming, and they're coming much quicker than most people think.
You know, I hope you're right. I'm with you. At this point, I'm just like, dude, something happened, please. You know, I talked to Nico last night, and I just tell him, like, bro, as long as there's some kind of volatility, we'll be okay. I'll be okay. This stable coin, you know, madness that we saw in 2025 is just driving me crazy. Like, you know, I don't know if I'd actually be prepared to see 3 million overnight, Luke. I might be losing my shit, and I'm going to really crash out on the show, and you might not see me again. You know, like 3 million overnight's crazy talk. But hey, I'd love to see it. You know, I would totally love to see it. But anyways, Luke, I know you do have a hard stop. So I'm going to go into the news. We're going to quickly fly through this news coming out of South Korea. And then in the culture, we're just going to get even more bullish than we already did on the show today. So one more commercial break, and we'll be right back.
I want to give a shout out to our partner, Ledin, the leader in Bitcoin-backed loans. Unlock the liquidity in your Bitcoin without having to sell your Bitcoin. They've issued $9 billion in loans to over 10,000 customers since 2018. I absolutely love these guys. Not only do I have an account with them, but I also have a loan. And what I love about them is that there are no monthly payments, and you could pay back the loan at any time. As soon as you send your Bitcoin as collateral, you'll have cash in your account within 24 hours. over 1,000 5-star customer reviews, and they've never lost a single dollar or sat of customer money. Go to learn.ledn.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Yeah, the chat's on fire today, Luke. They're really going hard on the mustache. But anyways, here's on Bitcoin Magazine headline: South Korea preparing to approve spot Bitcoin ETFs in crypto policy pivot. South Korea reportedly preparing to open its financial markets to spot Bitcoin ETFs this year, marking a shift in the country's long-standing approach to digital assets as regulators accelerate work on a comprehensive new crypto law. This was outlined in their newly released 2026 economic growth strategy, which I think the name in and of itself is very interesting. If approved, spot Bitcoin ETFs would become available to domestic investors for the first time, placing South Korea alongside markets such as the United States and Hong Kong, where obviously billions have flowed into the ETF. Until now, Korea's capital market rules have not recognized cryptocurrencies like Bitcoin as eligible underlying assets for ETFs, effectively blocking their launch. That stance is now changing as policymakers look to bring more crypto activity into regulated channels and reduce the flow of capital to offshore platforms. Now, an interesting kind of tidbit is, yes, it's ETFs. You could argue it's paper Bitcoin. But the main case, I think we really underestimate the dominoes that were dropped when BlackRock launched their ETF. It was one of those moments where you can't go back now. You either are playing the game or you're just going to be left behind. And now South Korea is realizing this. We've seen a lot of Asian nations kind of play the game, whether it was Hong Kong playing the ETF game. Now South Korea, obviously I think Kim Jong-un's probably like one of the biggest Bitcoin holders in the world. If we can say that the Lazarus Group is officially, state-sanctioned strategic Bitcoin reserve. So Kim Jong-un is a Bitcoin maxi. It's going into overdrive. And now that we saw Trump embrace Bitcoin, it's like the nation-state game theory is playing out in real time. Love it or hate it, this is where we are. Everyone wants some Bitcoin. Everyone is realizing they can't sleep on Bitcoin anymore. You have to embrace it. You have to, at the very least, allow it to go out. And if this is approved, of course, we've seen this play out before where, they kind of do this like, oh, we're going to launch Bitcoin, but it's only for approved, credited investors. They're kind of saying the same thing here, but if this does get launched and approved how they want it to do, which is not perfect in my opinion, as we always say, you don't need permission to buy Bitcoin, but obviously these institutions love to grant you permission that you don't need to use these products. But essentially it would be like 10 million South Koreans are able to start to invest in these Bitcoin ETFs. You could argue it's more paper Bitcoin. You could argue it's just Bitcoin opening up into a whole new market. But the point remains the same. Bitcoin is officially global. It's everywhere. It's in every jurisdiction. If you don't own some, you probably want to get some, and you probably want to get it outside these ETF wrappers. But hey, South Korea waking up. And one of the funny memes, I was joking. I'm like, yo, the kimchi premium's back on the table. Like, let's go. You know, like they used to be a thing in the past, kind of died down in the past few years. Maybe it's back on the table. Maybe there's an arbitrage opportunity here from, you know, the West to South Korea. I don't know. Hey, I'm just saying it looks like actually there was another data. I don't have it up here, but there was a chart that I saw going around that kind of further put some weight to this South Korea news, is that essentially the US and the European nations are lagging behind the Asian markets right now. The Asian markets are what's been driving Bitcoin recently. We've all been seeing the 10 a.m. drop. It's not really happening this week in the new year. But the Asian markets are the ones that are scooping up a lot of Bitcoin currently. And I think this South Korea ETF news is probably going to accelerate that. So, Luke, I'll pass it on to you. Don't go full Luke, 10-minute rant. Do a quick, succinct take on this so we can get into the culture and we can just end the Friday Hopium show.
Let me just rein myself in here.
Yeah, a little bit.
I got a quick South Korea take. So I think it's not a surprise that South Korea is embracing freedom money. It kind of reminded me of what New York's mayor actually said earlier in the week. Again, we're not going to play the video, but I'll remind you, New York's mayor came out and said, we are going to reject the frigidity of individualism, and we're going to embrace the warmth of collectivism. Now, again, this kind of reminded me a lot about the New York, the North Korea and the South Korea divide.
Yeah, that's a savage meme.
This really caught my attention. I'm not surprised that South Korea is embracing some more frigid individualism by maybe giving their people access to freedom money, while the North Koreans continue to embrace the warmth of collectivism with their state-sponsored hacking group that's confiscating the Bitcoin and giving it to their leaders. That's my short take on South Korea, North Korea. I'm not surprised. I think it's bullish. I'm here for it.
This meme should really be changed. It should be the warmth of individualism versus the frigidity. What's it? I can't even say it. The frigidity of collectivism. Like we all know, if you know anything about history, collectivists usually freeze and starve. I mean, look, hey, that's history, okay? That's just what the history books tell us. So the real warmth is in individualism, in capitalism, because, we we got the heaters, bro. We can actually pay for electricity and heat. But anyways, I'm trolling. All right, let's keep it moving. We're going to end the show super bullish. I'm going to ask Luke about his takes where we are right now. I'll give you my chart boy view this morning. Honestly, tentatively bullish. I know I've been saying that, but I'm starting to get bullish again, like really bullish. So the last 3 days aren't really working in my favor. It's not really a part of my name. Low chat. Anyways, we'll be right back.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high-performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com. I want to give a shout out to our partner, bitcoinben.io. If you're into freedom, Bitcoin, and building a real community, this is for you. Gain exclusive access to real-world, members-only private clubs across the globe, featuring poker nights, expert-led classes, co-working spaces, educational meetups, live events, and more. Current locations include Sarasota, Nashville, Boston, Dallas, Las Vegas, and St. Louis, with new clubs launching soon in West Palm Beach, Scottsdale, Alabama, and beyond. Not to mention Bitcoin Ben's resorts in El Salvador. There's 3 of them, and they're absolutely beautiful. You'll also get access to the first fully backed Bitcoin bank with fiat ramps and savings accounts. It's called Private Key Bank. And you guessed it, it's based out of El Salvador. Go peer-to-peer with Bitcoin bulk buys. Tap into home equity for long-term Bitcoin growth. And join their exclusive mining pools if you're interested in mining. What are you waiting for? Head over to bitcoinben.io. Join today, where Bitcoin meets freedom.
Oh man, yeah, the chat. You guys are killing me today. Love the chat. You guys are on point. Okay, all right. Luke, what's your hard stop? You got like 15, 20 minutes?
Yeah.
Okay.
Yeah.
Cool.
Yep.
All right, cool. So Luke, this is the point where I gotta troll you a little bit, bro. I have to troll you. Look, everyone knows Luke. Me and Luke are probably the most bullish Bitcoin creators. You know, on average, like every single day, we're probably the most bullish. Though towards the end of last year, I was literally the last Mohican of being bullish. Luke got a little bearish on me. I think he was listening to Nico a little too much. And even behind the scenes, I'm literally feeding Luke hopium. He's like, Opti, I need some hopium right now, please. Like, I'm starting to feel bearish. So, Luke, have you switched from bearish, tentatively short-term bearish, to tentatively short-term bullish? Where are we right now? And then I will pull up the charts. You know, I'll do some chart balling for you guys, maybe 1 minute chart. I know Luke wants me to pull up what I told him this morning, which is why I'm like, okay, this is healthy action. So, anyways, enough of me ranting. Luke, where are you currently?
Let's lay out some quick caveats. Again, we're both incredibly bullish in the medium term, the long term. We both kind of said earlier, look, end game for Bitcoin, it's not millions, it's tens of millions, if not hundreds of millions. I've even made the case for why it could be billions of dollars per Bitcoin in the future, a couple of decades from now. Today's purchasing power included. So again, caveats out the way. Another caveat as well, I think this is a great comment. It's an interesting comment. Something that Opti and I, you know, on my channel and Simply Bitcoin, we've never said anybody should leverage trade their Bitcoin. So again, I personally don't see how somebody can lose money by being bullish on Bitcoin. Like if you have your next 3 to 6 months of expenses like covered, like you're golden. I don't know how you can lose money by being bullish on Bitcoin, because we never say leverage trade your Bitcoin. This isn't the power law guys teaching you how to multiply your Bitcoin stack. They literally have trading courses on this, okay? Don't touch that. We say buy Bitcoin, put it in self-custody. Don't do anything else. Don't listen to the trading gurus. They're trying to take your money. So again, caveat there, I don't see how we could lose anybody any money ever. We are scamming people into profits by buying Bitcoin. And I actually think, I've said this for years as well, more money will be lost by the bear tards than the bull tards. So people are going to lose more money in the long term by being a little bit bearish on Bitcoin, trying to hedge, trying to get cute, trying to time the market. And I think when the history books are written, the bulls will make the most money. Again, not leverage trade bulls. That's moronic. But the people trying to hedge and wedge and look at models, they're going to lose money because we've already seen it play out. In Nigeria, all of the power law bros, they sold Bitcoin when it reached the top of the Nigerian Naira on the power law model. What's happened? Bitcoin's gone up 10x and they've been wrecked. Oof. People have been sidelined. Same thing in Pakistan, same thing in Sudan, same thing in Argentina with the Argentinian peso and the Turkish lira. All of the power laws have been destroyed. So again, caveats out of the way. Short term, I think the one chart that I look at that's kind of interesting. Now, again, I never talk about trading, but personally, like 50-week moving average, that's kind of interesting. Typically when Bitcoin is below the 50-week moving average, like all of my income that is not Bitcoin, I personally just kind of leave it on the sideline and I'll reallocate when we reclaim 50-week moving average. or when Bitcoin reaches the 200-day moving average, which has typically marked the lows of bear markets. So, I mean, 3 or 4 weeks ago, we were kind of like sitting on the edge of 100. This was just after the JP Morgan manipulated flash crash on October 10th. We lost the 50-week moving average, and I was like, that's kind of suspicious. I'll wait until that gets reclaimed before any incoming fiat that I do have gets shoveled into Bitcoin. Until then, I'm kind of more on the side and just kind of a little bit more wait and see. Again, I'm still balls deep Bitcoin. I'm still more long Bitcoin than most people, but like incoming cash flow, it's no longer getting shoveled straight into the market immediately.
Okay. All right. So, you know, I guess you're stacking fiat to buy lower right now.
Higher.
Or higher, I guess, if we do get some weekly price action. All right. Okay. So Luke's watching the 50-week moving averages, which I think everyone that has been in Bitcoin for a long time knows. And currently, I will agree with you. I think Nico is right on this as well. Currently, the setup on the week is it's not looking that hot. You know, we're under the 50-week moving average. The last time we were there, it was basically the start of the bear market, though that was 2021. Now I think there are new factors playing out. So this is kind of where I'm at right now, Luke, and I showed you this morning. This is what I've been looking at, and this is like, you know, my hopium. This is me just like praying that this is playing out exactly how we've seen it play out before. So again, oh wait, wrong one. I like this one. It's like Bitcoin spot crypto. It's got a lot more data. It's all the exchanges connected. So currently looking at where we've been the last couple of days, this is, you know, the start of the new year. On January 1st, or rather January 2nd, we finally broke through the 50-day moving average. And we were moving up towards this 93, 94 range, depending on where you put your magic lines. We corrected the last couple of days. It was actually kind of green this morning, but currently, you know, we're on the decline a little bit. But what is interesting is that the 50-day moving average is holding up damn near perfectly. Now, does this necessarily mean that we are going, that we're not going to be in a bear market? Not necessarily. When you look back at what happens in Bitcoin, usually when we cross the 50-day moving average, again, it's in blue here for you guys watching on YouTube and Rumble and Twitter, but usually when we cross back over the 50-day moving average is when we start seeing some bullish action. And you can see my yellow crosses here. This one's technically a death cross, and this one is the golden cross. So we haven't really seen the golden cross happen on the daily yet, on the daily moving averages, but if we can maintain being held up by this 50-day moving average and we start to run up towards the 100K, then we're going to see eventually the golden cross happen, probably in a few weeks, I would argue, maybe like next week, 2 weeks, if we do see some more momentum to the upside. Now, this doesn't necessarily mean that this is ironclad rule here, because we have seen where it gets over the 50-day moving average and then it gets rejected by the 200-day moving average, and then we're kind of in this prolonged sideways action. But usually it holds up pretty damn well. You can back test it. It's not perfect. It's not a definitive indicator of what's going to happen. But usually, unless we see something like the 2020 crash here, which it's not out of the realm of possibility, once we start making moves past the 50-day moving average, it's when things are going to get really bullish. So I'm holding my hat right now. I'm putting all my faith in the magic 50-day moving average. If it can maintain holding us, then guys, I think it's rocket boosters. I think we're finally going to get the action back into Bitcoin. So that's kind of what I'm watching. I know you guys always troll me and talk about my TA, my chart boying. I don't trade. I do look at charts kind of to get an idea of where we are. And on that note, before I pass it over to Luke, just for the lols here, just for the chart, we're going to the 1 minute chart right here. We'll watch the 1 minute chart as Luke goes. So Luke, do you hold that much faith in, I know you're talking about the weekly moving averages. And of course, usually you go from bigger time frames, you know, and then move to smaller time frames. So that's kind of why I think I'm looking at the daily moving averages right now, because I know what the overall kind of weekly, monthly trends are. They're not looking too hot, but I'm starting to see that, you know, as all the Wall Street institutions are telling us, they're basically hinting, hey, we're going into Bitcoin. Like, we are not going any lower. They're like, the bottom is in. So that's why I've been looking at the daily movements right here and seeing if this kind of pivot back up on the daily is really an indicator of where we are. So, you know, I'm zoomed in right now on the daily moving averages, but do you hold much weight on those?
I do. I'm like you. I like to watch charts. I never encourage anybody to trade based on any indicators because nobody knows where the price is going. Opti's trading program. We don't have any trading programs to sell.
This is my free trading course.
There you go. More valuable than the Power Law trading course. But again, for me, like, yes, short-term stuff, I'm watching it very closely. I think right now what I'm really interested in watching is there's a lot of like big YouTubers who, again, like I respect, like Ben Cohen has 1 million subscribers on YouTube, and he's right now waiting for Bitcoin to go to the 200-day moving average because of the 4 years candlestick astrology and all of the charts that, you know, we have 3 data points for that show that when Bitcoin loses the 50-week, we go to the 200-day moving average, which today's at 55K. Now, again, I am your all cycles will be broken maximalist. I think this will be broken as well. And I also am seeing all of the same data that you're looking at, Opti. Maybe it could get broken now this year. But again, like in the short term, I'm still super uncertain on where the price is going because I have no idea. But those are just the things that I'm watching. And the fact that you're watching Wall Street roll out all of their products in the 2 weeks after they crashed Bitcoin deliberately in November, that's kind of the things that I'm watching and saying, hey, what do they know that we don't know? And like you also said, since Jan 1, all of the sell pressures kind of disappeared, and all of the people who are selling, they've now flipped to buyers. Most of you have probably seen those charts. So it's all of those type of things that make me watch what Bitcoin is doing very closely. And, you know, who knows what's going to happen over the next 6 months, but I think a year from now, 2 years from now, anybody buying Bitcoin today at 90, they're going to be happy with themselves. Just don't try to get too cute thinking that 80K is coming so you don't buy. I think a lot of people are going to do that and they're going to get wrecked because there's so many big accounts convinced that we're in a bear market because Bitcoin topped in Q4 2025. I wouldn't be trusting anything. I would be assigning probabilities to everything.
Yeah, that's a good take, though. You know, I have such a low IQ that I can't even attribute probabilities to thing. I'm just like, this is what's happening because I said so. I am the source. This is how I'm making my moves. But yeah, no, I mean, I think that's a fair thing to say. Like, obviously, currently, if 2025 taught us any lesson, no one knows what's happening to the price right now. I think everyone was bamboozled. No one had any clue what was actually going to happen. We all had kind of speculations. We all had ideas of what's going to happen. Hence why I'm like you. That's why I'm thinking 2026 is going to be a GOAT year because of all of the uncertainty that we saw in 2025. And really, the biggest tell to me is the fact that all these institutions basically manufactured a drop in Bitcoin so that they can launch their Bitcoin products at that local bottom, knowing that, hey, probably not going to go any lower than it is right now currently. So to me, I'm like, yo, just watch what the big money is doing. As the meme always goes, just follow the money. What is the money doing? They're launching Bitcoin products at the 80K low. They're talking about the price going up. They're talking about inflows. It's like, I think they're not only talking about it, they're recommending 1 to 4% portfolio allocations to Bitcoin, which in a percentage terms is not that much, but in terms of how much capital they actually control, it's actually a lot of capital that they're basically allocating to Bitcoin, and this is just the start of it. So I'm like, yo, I think we're going up. Like, I'm not like these people that are saying, oh, Q1, Q2 is going to be bad. I'm like, I think Q1, Q2 is probably going to be great. Maybe Q3, Q4 will be bad. But then again, the midterms are coming up. The Fed balance sheet is expanding. I don't know if you guys saw the Trump stuff, but there's some interesting kind of quips coming out of Trump. One, they're going to expand the defense budget by 50% in 2027. They're talking about $200 billion mortgage bonds. They're talking about giving Greenland citizens $10K to $100K to buy their country. Do you know where that money's coming from, guys? Well, quick, TLDR short of it, they are printing that money out of thin air. The money printer is about to turn hot. And that's only not even talking about the fact that they're going to basically have to do helicopter money for the average American at this point. So we feel good about what's going on. I'm like, yo, I've been saying tsunami of money printing's coming. The money printing super cycle is coming. I think it's here. I think we just saw the beginning. I think they just started tapping onto it. That's my case. I'm bullish. I think we're going up.
I think Bitcoin will, and again, we don't do short-term shit, but I think by the end of 2026, Bitcoin will be higher than it is right now. For me, the only question I have is QT just ended. The balance sheets kind of like began expanding a little bit. I am very confident that when it expands a lot, Bitcoin's going to be the fastest horse. For me, I don't know whether that really quick expansion comes in Q3 or Q4, and I don't know what we see in Q1 and Q2. That's kind of more where I'm probably leaning more towards the uncertain side, and I'm just watching all possibilities for now until we get above. Where's the 50-week at? I think it's at like about 100K.
50-week? Let me see. Let me pull it up. 50-week.
If we get back above 100, like
50-week is 101.8.
Also a psychological barrier, 100K.
Yeah, that's the number we got to pass.
Above 100, I am insanely bullish for the next 6 months.
Let's go. All right, good place to end. Good place to end. I said the same thing. I believe it was yesterday. I'm like, look, this 94, 95K range. Once we get through that, then it's 100, 101. And if we break through 101, it's like game on. Hey, it might have been a year late, but I think that if it does break 101, it's going to rip violently. That's my view of what's going on. So anyways, hold on. I like this trading channel. This is not trading advice, okay? This is astrology for the boys, okay? This is astrology for the boys, all right? Okay. All right, Luke. Any more things you want to say? Last thing you want to say? It's good to have you back. We've had a lot of bearishness on the show, aka Nico. And Nico's gone, and we can get stupidly bullish. Yeah. So last thing, or did you get it all out already? Pause.
I think I got it all out. I think 50.
Hey, yo, pause.
Pause. Pause on the bullishness.
No, pause on that statement. Anyways, I'll tell you what I mean afterwards. He doesn't speak, he doesn't speak American here, so he doesn't get my jokes. Okay, all right, boys. Luke, thank you so much. I know you got to run, but hang out like 20 seconds after the show. I'm going to wrap up. So, guys, if you don't know Luke, go check him out on Luke Mikic on YouTube. Also, you can see him troll on Twitter as well. I believe it's Luke Mikic 21. I believe it is, if I remember correctly. Do I get a nod, Luke? Is it? Yes. Okay, Luke Mikic 21. All right, guys, it's Friday. We made it another week. We made it through the first official week of 2026. Let's see if I'm right moving into the rest of the year. If I am right, guys, then I will own the title of your crypto, your Bitcoin quant. Okay, 42 IQ quant, financial advisor here. Actually, I won't. I disown that last one. Okay, I disown that last name. That's not what I am. But I'll be your 42 IQ Bitcoin quant. For everyone that's asking, Nico and Sophie are at the hospital right now. I don't have an update yet, but they are about to birth their second beautiful baby girl. So thoughts and prayers, send the love to them. They're doing it right now. Nico should be back next week. We'll see. Anyways, on that note, guys, it's the weekend. Get outside, get some good food, get some sun, get some fresh air, call your loved ones, all that good stuff. All right, guys, peace out.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.